correction ahead, I have been spotting several technical red flags on the US market, and I'm going to be sharing with you in this video. I'm also going to be sharing two tools that you can use to hedge against potential market correction, if it's not a crash, right? Let's have a look. My name is Les, I'm Chief Analyst of BG Trading Australia. Today is October 15, 2025. I'd like to remind you this is not a financial advice video. It is just us from BG Trading sharing with you how we apply BGS 20 strategies together with our VIP members to chase 20 to 40% profit within 1 to 3 months using our proprietary BGS 20 strategy. We not only look into the technical formation, but we take our trading opportunities from multi-dimensional levels. We look into fundamentals, technical, and also what the macro outlook in that particular sector looks like. And then we look for value, right? Because that's when we make most of the money buying high quality companies at technically discounted price, offering strong fundamental value. And we have been doing that all through the year. And we made incredibly good profits with gold stocks, where everyone now is talking about gold stocks. We are mostly out of all the gold stocks because we already made our trade. Now people are following into gold stocks. Really got to be careful with that, because if the market corrects, then I'm pretty sure gold tends to come together, then to come down as well. And I can see, you can just look at historic data. Every time we have a market correction, gold stocks tend to go down as well with the market. So not necessarily a hedge, but I'm going to show you here a very good hedge tool that I think anyone could be using to not only protect capital, but also profit out of potential correction. But before, remember to subscribe this channel. If you like the video, please share with someone that you believe would be interested on. We also would like to invite you to become a member of our free Facebook community, BG Trading Buy, Sell, Grow Strategy for share traders. And also we are now on Discord, which we share a lot of trading opportunities, market updates, and anyone can bring potential opportunities which we can analyze and see if it is our opportunity to make 20 to 40% or more within 1 to 3 months. So really interesting community. Just use the link at the description below. Now, let's start with S&P 500 first, right? What I would like to highlight in this video on the S&P 500, first of all, across not only S&P 500 but Nasdaq and Dow Jones, we're going to go through. I've seen strong selling volume, right, on distribution days, and that's when you really gotta be careful. You see this 2 days ago, we had this huge red candle at strong volume, and really gotta be careful when that happens. That confirms that not only retail investors are selling, but also confirm institutional distribution. And that is when normally raises red flags for potential correction. As you can see right here, before this deep correction that we had a period of strong volatility, which is what I think we're going to be entering before a deep correction. So strong volatility. See, we had this distribution day with really high volume there, and then another distribution day, and then a small recovery, and then distribution days, 3 distribution days again, small recovery. This is not accumulation. This is a distribution, which means selling pressure are building up. And these are the first signs of selling pressure building up. It wouldn't surprise me if in the next week we had another big distribution day again, following by a quick recover. But again, if that happens again, then we would be most definitely prone for a potential correction. Also, the RSI, the relative strength index, not looking good at all from this perspective, and that is when our second bearish indication right there, with not having a constructive formation on RSI. Really gotta be careful. S&P 500 prone for high volatility and potentially a correction. If a correction happens, right, hypothetically, we could be up for 5 to 15% correction. Yes, 5 to 15% correction. Historically, as you can see here, in the past similar events, when we have a correction followed by we have like several distribution days followed by a correction. Here, this is another case right there, very, very similar right there. Then a recover, and then a big distribution day, a little recover, and then the market takes a correction, comes up again, big distribution day, but then the sell pressure is formed right there. This is just few examples when distribution starts to appearing too often to be taken as accumulation, right? The S&P 500. Now let's take a look. Let's take a look on a Nasdaq, right? Nasdaq. This is where the most risk lies at the moment, with obviously tech stocks. So you can argue that AI is the big thing, and then none of the stocks, they will go down. They will keep going up forever, but that's not the reality. History shows that stocks will go up and go down. So Nasdaq also not constructive at all at the moment, right? And also showing on the RSI potential correction ahead, right? We call that bearish divergence. The stocks are going up, and then the RSI building into a bearish formation, right? So diverge from the rally that we are having with the index itself. So while prices were making new highs, the RSI has been trending lower. Absolutely sell pressure ahead. Just be careful once again. And then lastly, we are looking at the Dow Jones, and again, if you look at down here, then we have 1, 2, 3, 4, 5 distribution days in a row. Then 2 days which the market rapidly recovers. But then, and you can argue, okay, that happened already here, but this is different, guys, because we have now what we call the RSI confirming a bearish divergence being forming in the long trend as well. Not only on the it's not a bullish formation, as here you can see we're still into a bullish formation there, but as you can see right there, a strong bullish formation, right, which showed that we would have a recovery ahead, which exactly what happened. But now as you can see here, it is forming lower lows and lower highs on RSI, and that leads me to believe that we could have a correction ahead. So all the US and major indexes showing correction ahead. So very, very careful, right? bullish momentum is exhausting. And whereas everyone is super excited with the market at the moment, I would just be very, very careful. I would be expecting at least in the down to come down towards this 44 points level, but potentially we could see even $43,000 level. So we could be very, very shortly entering into a volatility period. If that happens, then wait for a potential correction, right? Let me know what you think. Leave your comments at the description below. I can see that the SMA 40, our short-term moving average, is working as a support as we speak, right? As soon as it breaks, then that's when we should have a correction, right? Just watch very, very carefully and stay into stocks that are offering value, strong fundamentals, and are in safe sector. So now let's take a look 2 ways to hedge against potential fall. First one, okay, we are going to be looking at a bear. Bear is S&P ASX 200. So essentially you will be hedging against a fall on ASX 200 index, right? Obviously, if US market falls, then ASX 200 could be potentially falling as well, and then you want to protect the overall capital, then you can allocate part of the portfolio into that. Interesting enough, it's building a very solid and potential constructive formation for a bounce from these multi-year lows right there. And when that happens, if that happens, then we have a correction, then we could see this moving towards $8 very, 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 very easily. Obviously only would give you 12% upside, but where everyone will be losing money, you could be making money, and not only that, but hedging against a overall capital depreciation due a sell-off, right? And the other one is BBUS. BBUS is a strong beta share geared. So it essentially means if US market falls, if US market goes down by 10%, so this ETF goes up by 20 or 25%, like 2 to 2.5 times leverage, right? And look at this formation here. Look at this formation. Look at the distance between the short-term moving average and the actual candles. So it's about 30%. The candles are trading 30% below, right? 30% below. So what I would say is just very, very careful with that, with the indexes, because even on the inverted, we can see that there has been a constructive formation in favor of a potential US market correction, right? And this is the best ways, 2 best ways to hedge against a market correction, right? Look, for example, if eventually US market, the S&P 500 falls about 10%, so which is very, very likely, is within our modeling, we'll be looking at 20 to 25% profit, right? And that is when the savvy investor won't be FOMOing with most of, like with everyone else, and will be positioning towards the next 2 to 3 months potential movement in the market. So just keep that in mind, right? Obviously, there's no guarantees in the market, but keep that in mind that we are spotting several red flags in US market that could lead, obviously, the ASX 200 as well into a correction, right? Hope that was valuable, guys. Let us know what you think. and I'll see you in the next video. Bye.